Hey guys, hey friends. I hope you're doing well and I hope your families are okay. So, this past week has been really terrible for me, and some of you also have reported the same thing to me. But I do believe that the price action was because of the bad price action was because of the high impact news. We had news events, we had CPI, we had NFP all in the same week. So price action was really bad. As you know, I would have like one or two trades per day, but then when whenever I went the charts, I mean the price action was really bad, and I decided to stay away. But I have two trades, two trades that were really good. I think one was on DAX, and then another was on the GU. So let me go through how I took the trades. But before I go into the analysis and showing how I was able to get the trade and how I entered, just a quick reminder that I'm not a financial advisor, guys. And yeah, so basically, just don't use anything you hear from my videos as a financial advice. Be safe out there, guys. There is so much scam going on, especially in this industry. And I was supposed to make a video about prop firms because many of you have requested me to do so, but I am sorry I'm not going to make the video today because I I do have what is it called, like a meetup for the family. Like, we've got something going on with the family, be together, and yeah, so I don't have much time, and the video for prop firms has to be longer than this current video that I'm making now, because I have to go through a lot of stuff, explaining a lot of stuff. But I thought of, instead, since I promised to give you a video this weekend, I thought of going through the two trades I had. And yeah, but if you missed any trades this past week, if you didn't take any trades at all, congratulations to you, because it means you are growing. You've been able to identify that the price action is really bad and you managed to stay away. So that was really good, really good. And those who are not disciplined have lost their accounts, their funded accounts, their personal live accounts. You need to know when you have to stay away from the market and be safe. So there, as you can see already with the DAX, we have price grabbing liquidity from here. We have price, after grabbing liquidity, pushing up, breaking this short-term structure, price coming back into it, and then price starts going up. And then we have this pool of liquidity, price has gone through it. We have this one, price has gone through it, and I think the target now has to be here. All right, and you can see how price has been breaking structures, price mitigating, and then continuing to the upside. So now, and you can see here, price came into this gap in here, right? And then price continued. But the trade I had was taken on the 7th. So I'm going to look on the 7th and then just use the replay tool to go there. Okay. So I'm going to remove this. Okay, like that. So the first thing I saw was that price has taken this swing high, broken structure, and my thought process was that price has to come back into this structure and then continue. But it doesn't always happen like that. Okay, it doesn't always happen like that, even though 99% chance is that price has to come back into this structure, but it doesn't always happen like that, especially if there is news events happening. What they would do is price is going to be into some kind of consolidation, which and they will be accumulating some orders, and then price is gonna do like dumping a little bit, and then when the time comes for the event, you'll see a huge move to the upside. So just um, hours, or let me say a few days or hours before the event, the news event, price goes into a phase I call accumulation. They're accumulating orders, and that is where most of us, the retail traders, are being taken out. You enter a trade, it's taken out, and price action is not clear. And then if you continue to force your trades, then you are losing discipline, and so the market is gonna deal with you. Okay, so I came to M15. To be honest with you guys, let me be so honest with you. My bias was to sell. The reason is when we have broken structure, price has to come back. And this is the morning. This is like on this candle. The next 1 hour candle is the London session. So I was gonna look for sales from here. However, we broke structure. We still have previous days high here and days low here, and I was thinking the price is going to grab this liquidity here, just a small tap here, and then we come back in this structure. That was my bias. That's what I thought the price was going to do. And so when I'm gonna use my session indicator, and obviously you can see um, I have my Asian session low right here. Okay, uh, just a second. Okay, so now I have my Asian session low. This is which has sell side liquidity. Asian high is over here. I'm sorry. Asian session um, is over here, and then we have also these are all buy side liquidity. And I was thinking that price is going to, since there is no structure, you can see guys, there's no structure to sell, right? There's no structure to sell. So I was thinking that price is going to grab this liquidity here, and then it will come break this low and then give us a good sell. This is what I anticipated, but things don't always happen the way you want them to be. So this is now this next candle. This is London opens, and we just grab liquidity from here. When I went to M1, I was like, oh, all right, look at this. So price has taken this liquidity and broken structure. Okay, and broken structure. So that means we are, even though my bias is to sell, we still have liquidity pool above here. So I said to myself, if I buy from here, my stop loss goes down here. I can target this liquidity pool in here. I only targeted this liquidity pool from the Asian highs, but this other one, we don't know if price is going to go for it. Since we have two, it can just grab this one and then fall, or go for this other one as well. So our 1:5 was enough for me, right? It was enough for me, and I entered in this candle right here. Let me zoom in for you guys. This candle, I entered as this candle was coming down. I entered right here, and price goes up. Let me switch to M5. That was my entry. I asked myself, should I make two targets? Maybe target this sells buy side liquidity. But since we have two, I have no idea if price is going to go there. So all I had to do was to lock in my profits and just watch what price does. And we're going small retracement. I'm still holding, and boom, my target was hit right here, and I just closed my trade. 1:5 is really impressive, guys. You don't have to go for 1:15, 1:20. You don't have, if you have a model that gives you that much, it's okay. But for me, because I've got a high win rate, right? I don't need 1:30. I have got my win rate is really good. I get more than 70%, like 80, sometimes 90, sometimes 95%. Most of the times I could have 10 trades and have one losing trade, or I win all of them. So my win rate is okay. So I don't need 1:15, 1:20. Like the highest I've had was like 1:13, but my minimum is 1:3. So anything 1:2, I don't close my trade. I don't. So my minimum is 1:3, and I don't have a maximum. I can let price keep going, but my minimum is 1:2. So there we go. This is how I took the trade. And then after taking 1:5, I was thinking that, okay, now let's see if price will come and break this structure here. Now here, this became my trading range. But for me to have a complete trading range, I need price to make a high, right? So let's see. And price ended up taking out even this swing high. So let me see if this is, if we put in a high, and my thinking is if we break this low, then I can look for another for a sell, and eventually price just kept on moving higher. So this is how I took this trade. Now let me go to GU. As you can see, guys, price never came down again. But let me go to GU, a trade I took on the 9th. So this is how my GU looks. This is my annotations, and there's a video I had, I don't even remember the title. I said that EU was gonna, I think by that time it was somewhere here, and I said price was gonna come in this range somewhere here, and then would go higher. I don't know if you guys paid attention to that video, but you can see my annotations, how I marked them, right? When price made this high, we put in a low, we put in a high, but look at this. We failed to put in another lower low. We put in, is it a lower high, or I don't even know these terms, guys. You see, we failed to take out this low. Instead, we took out this high and put in, is it a higher high? Right? And then that price came from mitigation into this structure, and then price starts going up. So I do believe that now EU and GU is bullish until we come into this area. Here is where the decision is going to be made if we're going to be bullish for long term, or if we are just coming to touch this structure and continue our bearish structure, as you can see on the weekly time frame. Things that could happen is it could take out this swing high as a liquidity grab and then fall, or it could just take it out, make a structure here, and we continue up. But this is where we are definitely coming. So let me go on the 9th. Where is the 9th? Yeah, this candle. So I'll use the replay. Go to a lower time frame. Okay. And when price came to touch this order block, my bias was to take out this swing high, because price has just changed direction, because we put in a high, a low, a high, we failed to take out the low. What does it mean? If price fails to take out the low, then it will go for the high. Price came to the high, failed, but again failed to take out this low. We come up to test these highs again, and they were taken out. Once they are taken out, price came into this structure, and now we have to test this high again to either fail it or to continue. Beg your pardon. So I went to the M1, no, I'm sorry, H1. So let me put my session indicator. This is where London opened. We have a bearish structure, a bearish move, I mean. This is previous day's low, right? Then we have this order block. Why is it an order block? Because we were on support, and then we bought, and after buying, immediately there was a down candle. So this becomes an order block. So you see this candle here is an order block, and there is a retracement, this move into the order block. I move to M15, to M15. I'm gonna use the Fibonacci. From here to here, price doesn't come into our Fibonacci area 50 to 62, but price has failed to breach previous day's low. So this here, I show you here, this is a liquidity grab. So if you go in here, you can find an entry that will give you about 40 pips or 45 pips from here, because this is a liquidity grab. But the moment price fails to come and take this high, it's no longer a liquidity grab, because price came and broke it. If we break this low, then it's no longer a liquidity grab. It was a liquidity grab from here, and if you found an entry, 45 pips is enough. But if price comes and takes out this low, Then we've switched from liquidity grab to break in structure. So now this horizontal line is the previous day's low, and price is failing to go higher as it comes back into this structure. So now I'm gonna switch to M5. There you go. Now when we come to M5, what do we spot here? We have a liquidity void or imbalance, whichever you call it. I beg your pardon. We come into it. Price fails 1, 2, 3. On the fourth candle, I was in. My stop loss just above here. It was about 5 pips. 6 pips, I think 6 here. I entered in this candle, a small pullback. And because my stop loss wasn't actually really good, within this pullback, if I wanted, I could have moved my stop loss a little bit further, maybe up to 10 pips. Why? Because putting my stop loss here wasn't a good idea. Price could just come, take me out, and then continue going down. All right. Luckily, before I could move my stop loss a little bit further, price started going down. Okay. So here on this candle is where I closed. 1:8. 1:8 with 55 pips. If I could have closed on this candle 67 pips and 1:10, but I was okay with this. So these are the only two good trades I took this past week. The other I took another one on US 30, which was okay, 1:3. But the other ones I took, which were like 2 trades, I think, were break even, meaning I entered, locked in, and price came and took me out with a small profit. So those are break even. I don't even count them as trades. Okay, so this is what happened basically this past week. It wasn't a good week. Price action was really bad. But I anticipate good price action this coming week. So this is it for this video, guys. I hope you've learned something. You can leave your comments, your questions, and I'll try my best to start uploading videos on prop firms, how to raise capital, how to trade prop firms, how to pass the challenge, and once you pass, how to maintain your funded account and keep it for the long term, right? You don't have to pass the challenge after struggling for 1 year to pass the challenge, and eventually once you pass, you lose it in 1 month. You don't want that to happen, okay? So focus and focus and focus, guys. Master one model. ICT teaches so many models. You have to pick one that is in line with your character. You need to understand yourself first. You need to understand your weaknesses, where you are strong enough, and that will help you out to pick the best model for yourself. And then also avoid avoid learning different strategies at the same time. You cannot be studying the ICT concept, also studying at the same time the Falcon trading, trend lines, and supply and demand. No, because we've been told that if you that the combination of so many styles makes a good strategy, but that's not true. You need to focus on one and master it. So stay well, guys, and may God bless you and stay safe.